Hey everybody, it's Tuesday, June 29th. It's 4:05 in the afternoon. Just want to quickly recap on that little scalp trade. I didn't really get to tell everybody kind of what to do, but I did give you the heads up earlier that 340 could be a good scalp as the end of day orders kick in and the institutional or the leveraged funds have to rebalance. And of course, if it's a down market, they need to do a bunch of short positions, sell short in order to catch up with the market, and that puts a down pressure. Anyway, today it's been grinding. It sold down early this morning. It's been grinding lower all day, and then we saw a nice breakdown right around 3 o'clock. And this is the minute chart here. And what we saw was everybody was anticipating the 340 sell-off with the leverage funds, and people got in it, took advantage of it, and they actually forced the market down. And then of course it rebounded, and I went short right here at 1036 on that light. It sold down on heavy volume. We had a light volume drift back up, and it was 335. Anyways, I took a short position at 1036, and then we just saw it free fall. I covered quickly here at 1033 once it got down near the lows here, because it could easily form a double bottom and bounce. So I quickly covered a couple contracts here, and then I saw it just snap lower, and I covered a couple more down here, and then as soon as I saw it jump back up, I covered the balance. It was a quick $1,500 trade, but pretty exciting. Other than that, let me just show you how I kind of wanted to get out down here. If I look at the daily chart, let me just pull this up here. If we zoom in on the daily chart, we can see the May low right down here. It was broken, and it happened to be sitting at let me put the cursor on it. Low was 1032.75. As soon as we hit 1072.35, we got a quick flood of sell orders that caused the new low, and usually you just get a break of it, and that's when the big buyers step back in. And I saw tons of volume piling in, and let me just zoom in here. As soon as it hit down at this level, the 1032.75, instantly a rush of orders. You can see a spike down here. It instantly dropped, and that's when I quickly covered. I want to cover some of it on a sharp drop like that. The initial wave of stops being triggered, and then it started to kind of work its way up, and then once it broke this high here, that's where I covered the balance real quick. And of course everybody else covered their shorts, and it caused that big rally, right, that short covering into the close there. Anyways, that's about it. On the side here, I've got the time and sales, so I can see which orders are going off. I can adjust this time and sales to show. Usually I have it set at 20, so it's only showing me orders of 20 or larger for the futures contracts. And right now the market's closed, so the volumes are much lighter, but I'll see waves and waves of red or green. And usually I keep an eye on these numbers. If the red numbers tend to be larger than the green numbers, then you know there's definitely more sellers out there. And if the green numbers happen to be larger on average than the red numbers, then you know there's bigger buyers than sellers. So I can see that shifting. A lot of times when the market's selling down like this, you'll see 100, 200, 800 contracts going off pretty quick, and they'll all be big numbers, and there'll be small buy orders. There'll be 20, 20, 80, 100, 20, 25. So it'll be all kinds of small stuff. So that's kind of what I look at, and of course on my screen I have this time and sales stretched out much larger, so I get a much longer picture of what's going on. But that's kind of what I was looking at pretty much. 345, I mentioned it last week. Usually 340, 345 is when we see a wave. It's when brokers usually have end of day orders that start to kick in. They have margin calls kick in for people who can't afford to pay up. They've got to liquidate the position. So 330 or 340, 345, we usually see some type of wave. If the market's down, we'll see a wave down. If the market's up, we tend to see buying at that time, because in an up market, if the market is currently trading above a certain price, people want to buy into a strong closing of a market, and it causes the market to go the other way. They want to get into a position. So It happens, whatever the trend is usually what's going to happen around 340, 345. Not always. It has to be on a pretty extreme day. And of course, today is 3% down the market. Nasdaq's almost down 4. Russell 2000 is down 3.75%. So today was a pretty extreme day, which is why I really like this setup. And the fact that we actually had this pre-breakdown and drift up near resistance here, and then 340 started. It couldn't have really been much better than that, and we literally caught a 5-10 minute draft down, and that was it. So anyways, I hope that helps, and I'll talk to you in a bit.